Hi there. On today's edition of Behind the Charts, we're going to sit down with Jeff Hirsch. We caught up with Jeff at the Traders Expo in Las Vegas not too long ago. He's the editor of the Stock Traders Almanac, also the chief market strategist at Probabilities Fund Management. Jeff's father, Yale Hirsch, started the Stock Traders Almanac in the late 1960s, and Jeff now has taken over the reins and has kept it going for years and years. So it's one of the longest-running, consistently published financial books that I've ever known about, and I've subscribed to it for years. It was fun talking with Jeff about his process. In particular, I think of Jeff as being focused on cycles and seasonality, which he definitely is, but he reminded me that it's not just about the cycles, it's not just about the seasonal trends, it's also about price itself. And I think he, more than anyone, has illustrated how not just betting on cycles, but betting on the trends that form those cycles over time is where you can really be on the right side of the trends over time. So here's Jeff Hirsch, editor of the Stock Traders Almanac. Hey everyone, we're sitting down today with Jeff Hirsch. He's the editor-in-chief of the Stock Traders Almanac and the chief market strategist for the Probabilities Funds. Jeff, thanks so much for joining us.
Great to be with you.
What a pleasure to sit down with you.
It is.
Followed your work for years and years. Used to get your newsletter. Absolutely love the idea of seasonality, cyclicality, and that nature of the markets. Can you just describe a little bit about what your investment approach is? Someone asks you, what's the Almanac methodology? How would you describe it?
We get sort of compartmentalized into the seasonal cycles, patterns area, but we're much more than that.
Okay.
That's just a starting point. It's a foundation for us. That's where our roots are. But we use 5 big disciplines: fundamentals, technicals, seasonals, of course, psychology, market sentiment, and that sort of thing, and geopolitics and monetary policy. So
got it.
It's not just seasonality.
Yeah.
And there's a lot of technical analysis in there. I can read a chart. And I had to do stock screen. I can find support, even without some sort of Bollinger Band or pivot point. I can show you where some support and consolidation or gap might be. That's the stuff I learned from my father when I started the business way back.
Yeah, so can you talk a little bit about that? How did you kind of get started? What kind of brought you to this point where you're...
It was, I was born, bred, weaned, raised on the thing.
Yeah.
My father started the business in '66, the year I was born.
Got it.
Came out with the first almanac in '67. I was about a year and change. That was the '68 book.
And this is your father, Yale Hirsch,
Yale
right?
Hirsch.
Yep.
He's 96.
Wow.
He was 96 last month.
Yep.
Still kind of knows where the day. He gets his New York Times every day.
No kidding.
And I had him play some show tunes on the piano. Him and Mom are both at the nursing home together.
Yeah.
So he's not sure if he had lunch or not, but he can play Melancholy Baby on the piano.
Good for him. Good for him.
So I used to, look at charts in my pajamas with Dad around the house and stuff, and shipping the books out of our house with the business, running out of the garage. Basically, we converted the old garage. So one of my jobs the other day is working in the mailroom. I started the mailroom,
Perfect.
Then I went into running numbers, not the bookie types of numbers, just the
running numbers.
The calculations.
Okay, good.
I do this little motion with my hand because we used to do it on an adding machine and graph paper.
Yep.
And then, I was in between things after school.
Yep.
I was landscaping and trying to do anything but work for my father. And my best friend, Keith, he said, "Jeff, what are you doing? Go work for your father." It's like, luckily, when I said okay and I started there was a certain connection, and a lot of people that Dad worked with over the years didn't always get his angle of looking at patterns and seasonalities and markets and cycles, and probably a bit of genetics there, and some osmosis and environmental exposure throughout the years. But that's one thing I got from him, and I was able to click with that. And then all that calculation stuff that I did by hand and graph paper, I converted it to Excel for DOS.
Wow.
Back in '92. I'm no computer whiz.
That's awesome.
But I just had to come up with a way to track it, and it was, the data was getting longer and longer, we were building on it.
Yeah.
Now it's in a database, of course, and we have all sorts of searchable things, and we constantly create new screens, whether it's, presidential election years where there's a Republican running for re-election and a Democratic, House and a Republican Senate, those different operations.
Right.
Put those things in there. And I started with them in 1990.
Okay.
And, the rest, as they say, is history. We've learned a lot over the years. We've built on what he's done. So it's kind of a privilege.
It's a great journey. So starting in 1990 to 2019. What's changed in terms of the process, the approach, or even just the overall environment? What has changed in terms of how you try to win the game here?
Well, I mean, SQL Server database it's changed a lot, made us as capable of doing a lot more.
Yeah.
We've added some things together, some indicators. Some things have dropped by the wayside that don't actually exist anymore. I mean, society changes. I mean, that's what we measure with seasonality, is the repetitive behaviors of society, cultural maneuverings of people in mass.
Right.
That's why people pay their bills at the beginning of the month. That's why I see these month-end strains. There's things that happen in quarterly periods, year ends, because people are doing things. The whole sell a man, go away, or best 6 months fishing strategy is because people are doing different things in the summer.
That's right.
Yep. So we've also compared different time frames. Instead of running everything, this is what the S&P's done since 1950. We look at since 1950, since 71, because that's when NASDAQ started.
Okay.
Since 88, because that's post-87 crash when we had the systemic changes. And then we look at the most recent, 21-year period for a lot of our different patterns and seasonalities. And then I'll also go look in there and see when something changes. If something flipped where, triple witching had a different behavior starting around 91, then something's changed there. You don't always necessarily know exactly what caused it, but if it's there, it's there.
Yeah. Now, when you're, maybe from the Stock Traders Almanac newsletter, for example, using all of those different inputs, that's a lot of different things, fundamental, technical, seasonal. How do you reconcile all those, especially when they disagree? What if the cycle's telling you one thing, but the chart might be telling you something different? How do you reconcile the disagreement between them?
If the setup's not there, and it's not tracking the seasonal properly, we'll take a pass.
Got it. Okay.
Or pick a buy limit below the market if it comes back to trend or reverts to the mean.
Yeah.
But we do use all the stuff to create portfolios in the newsletter, and we also use it to pick stocks. We just put out a new stock basket, fundamentally screened, which is such a deep screen. We use Zach's Research Wizard for the fundamentals.
Sure.
And it's growth, acceleration of growth, valuations, and it's just sort of not outperforming the S&P, not underperforming it, just sort of sitting there waiting to happen for the numbers that are coming through the quarterly reports and then the filings to come through. And then we look for stocks that are underfollowed within that, that basket, underfollowed by Wall Street.
Right.
So all things being equal, one stock is followed by 20 analysts, one's followed by 5 analysts. We're going to go with the one followed by 5.
Yeah.
And then we we boil 8,000 stocks down to about 100 or 150 or 50, depending on how it falls.
Yep.
And then we go into the charts. We'll use StockCharts. We'll use some other software. IBD's Market Smith I like too.
Sure.
And we'll just pick out the ones that look great and then look for our buy limits. And unlike a lot of other services, we have specific buy limits and stop losses. And with some of our sectors seasonal work, we have some targets.
Okay.
But for the most part, if the stock keeps going up, well, why sell it?
Right.
Let your winners ride, man.
That makes so much sense, but how often do people not do exactly what you just said, right?
Oh my God. Yeah. I mean, friends of mine that I talk to about stocks, and I'm like, I told you to sell that. It's like, hello, you got to listen. And I'm no better sometimes. I mean, we have for the fund that we help run, we have a prime broker. It's much better giving the instruction to somebody else and having them execute it.
That's right.
Because if you have to do it yourself, you're like, well, wait a second, I'm going to try to get it for another penny cheaper, or I want to sell it up a little higher.
Right.
You got to just check the emotions at the door.
That's right.
Really, it's hard. It's the hardest. It's the biggest battle for anyone in the market.
So do you have any techniques or any strategies that you use to try to remove the emotional component or minimize the emotional component? How do you do that when we're so wired to make poor decisions sometimes? Do you have any strategies or any ways that you try to, focus on the data, focus on
it's old school reminder stuff. I mean, there's stuff pinned on the wall, There's moments of weakness and existential trading crises that we remember.
Yes.
Like, remember that time, October 2011, when you were away at your sister-in-law's wedding, and the market was. And wait a second, we've got stop loss. Just Or we were leaving the money show one May, and we wanted to sell something before we got on the plane. And it was 2015, I think it was. It
Okay.
was a great, and it was like a total seasonal sell. And we
Yes.
just did pull the trigger. So a couple of points that you remember. You know,
Yep.
the path to success is a series of steps from failure to failure.
Yes.
So you have to remember. And in the almanac,
Yeah.
we have, you know, if you don't profit from your investment mistakes, somebody else will.
Right.
You gotta write them down. Performance and recommendations.
Fantastic.
You know, I mean,
Fantastic.
it's part of the whole thought process.
Yes.
And the other basic technique is, as I said before, let somebody else trade it. You know, if you can.
Yeah.
Or just, I mean, stick to your number.
Yeah.
And with stop losses, we don't put them in there
Okay.
for people to see.
Yeah.
It's a,
Yep.
it's a, you know, an alert stop loss.
Okay.
So
Sure.
if our stock closes below our stop loss, it gets sold the next trading day.
Got it. Got it. So do you have a regular process or routine to go back and review successful or maybe unsuccessful trades? Do you have a normal way that you go back and review what worked and maybe what didn't? Or how do you sort of evaluate your performance besides just looking at the performance of the bucket?
This is stuff that you learn over the years. I mean, there's not a particular way that I go evaluate. I mean, if the stock doubles, we sell half.
Yeah.
And let our winnings ride and put the rest back to work.
Right.
If it falls below the stop loss that we picked from seeing that support level on a chart,
Yes.
we're out.
Right.
Maybe it's a pivot point. Maybe it's a moving average. Maybe it's a gap. Maybe it's some low that we'll want, you know, that we'll want to not break through.
Yep.
So the trades get evaluated every month. I mean, we're looking at the stocks. I try not to get too much into the stories anymore,
Yep.
which a lot of people do, and you see that on the news shows a lot.
Yeah.
We're just looking for numbers, and
Yep.
I want stuff, you know, like Arista Networks, which just got knocked down again. That was a stock we had a bunch of years ago. Came through our screens, made a lot of upside gain on it, and then it hit our stop, and we're out. Haven't looked back at it. If it comes through the screens again, it will
consider it again.
I mean, that's what we found works. Is this kind of a combination of fundamentals, and the big thing with the stocks also is the time of year.
Okay.
We're not a stock of the month newsletter.
Right.
We're going to we put out a new basket in October. We're going to work that basket. We put out some defensives in June with dividends. We worked that for a while, you know. And there's some other opportunities to come in there. We've got some other trading strategies. There's the only free lunch on Wall Street.
Right.
You know, bargain stocks making new 52-week lows in December. What a great year for that last year. We had the big sell-off.
That's right.
We had 1,500 stocks making new lows on triple witching Friday or quadruple witching Friday, if you will. What do you think of quadruple witching Friday? Is there any influence of single stock futures?
I don't know.
Why do I have to call it quadruple witch? Nobody trades single stock futures.
No one does. I don't think you need to. Skip that.
Someone corrected me. All right, I'll call it the quad witch.
So here we are in early November. You know, you sort of alluded to what's happening in the markets. You know, the S&P continues to go to new highs. Things that had not really been working yet, like financials, now starting to break out and go higher. Defensive things like utilities and real estate that had been in a position of strength starting to roll over a little bit. What is your work? What is your process telling you about, you know, going into year end, heading into next year?
First of all, these things that just happened are so seasonal. It blows me away. I mean, seasonals don't work perfectly every year. This year they're working like a champ.
It's great.
And a charm. And we got out of our utilities and defensives and bonds that we'd been getting into for April, May, June.
Right.
And then again, we got out of everything, or we had our sell signal for Dow and S&P May 1st, our seasonal sell signal using MACD.
Right.
And then July 19th was NASDAQ. So we were prepared for that. And we had our buy signal October 11th. So anything that was left over in the defensive baskets was moved out, and we went diamonds, spiders, cubes, IWMs, you know, the ETFs, as well as all the sectors, the financials, tech, biotech, all that stuff. We went in there. So to me, it was like teed up for us.
Yeah.
And that's part of what happens seasonally every year. These stocks, these sectors tend to come into strength around October. If you look at the sector seasonality calendar in the book, there's this cluster in October where all these sectors, the ones you're talking about, some of the others, come into their bullish season.
Right. It's according to the playbook. That's great.
It is.
It's fantastic.
And it's set up technically. It's set up fundamentally.
Yeah.
That's the thing with MACD. You know, people, you know, moving average, convergence, divergence. I'm assuming people here know what that is.
Yeah.
But even the originator, and I'm pretty friendly with Marvin Appel, Jerry's son, the guy who created, you know, the same other father-son generation.
Yeah, that's right.
And, you know, Marvin's done some different things there, and we have some good chats about it. But the thing with MACD is it's not there to just use in a vacuum.
Yeah.
It's a confirm of an entry or an exit or a buy or a sell. So we use it to confirm, as Cy Harding, remember, right? Cy Harding? Ride of the Bear?
Oh, yeah, right.
Yeah.
Yep.
Cy's the one who came up with that. And his name's still in our book. He took Appel's MACD, laid it on top of our best and worst 6-month switching strategy.
Right.
Dubbed it the best mechanical system ever.
Yeah,
he was right, and we use it.
Keeps working.
We've done some new wrinkles to it where we're looking for confirm across Dow, S&P, and NASDAQ on the MACD buy. And the one that everyone thinks 1226.9, we're using 817.9.
Yeah.
On the buy side, 1226 on the sell.
Got it.
It's the whole rationale for that. But, you know, we just see these things happening regularly.
Yeah.
And it's a confirmation that we're probably moving higher.
Yeah, and you alluded to that a little bit earlier, I loved when you've written about that in the Almanac and elsewhere, that, you know, the seasonal trends, sort of the May to November kind of traditional, you know, stronger versus weaker part of the year, but validating that with the MACD, which really confirms that that's playing out, right? So if you just play the calendar, that's sort of like the amateurish level, I would say, but waiting for some confirmation from like MACD really validates that the trends are reversing.
And we're tracking the economic numbers as well. I mean, we have what we call market at a glance in the newsletter.
Okay,
It's the 5 disciplines: seasonal, psychological, fundamental, technical, and monetary. Monetary includes a little geopolitics in there as well, but now we got the Fed off our back, and looks like we're having tea with China. You know, can we get a dumpling in there? Can we get like a little dim sum or something? Kung Fu Panda action?
So recently you've added, I think, to or augmented what you've done with the Almanac and transitioned into a little more of a money management role sort of thing. Can you talk about that transition? Maybe what you've learned from that?
It wasn't just me. We've learned a lot there, and we did a whole strategy review and revamp of it earlier in 2019. Our partner Joe Childrey founded it. He was a broker branch manager at Wells Fargo, AG Edwards. I probably shipped books out to him when I was, you know, he's got a couple years on me, but I shipped them out to Ben Edwards. We used to sell like, you know, a couple thousand, 2,500 almanacs to AG Edwards. They put in their catalog. He had one on his desk every year, a gift from Ben Edwards. One year, he's going to African safari trip, leaving from the office, you know, bucket list trip. I think he might even want it for me to producer. Nothing to read. Grabs the almanac off the conference room table, takes it with him on a flight. 3 weeks in Africa, reads it, becomes a trend following convert, comes back, trades it for his own account, trades it for client's account, then got together with a math PhD, created a strategy based upon a lot of stuff in there, added a few other wrinkles to it, and started a hedge fund in 2008. Was up 2.28 or 5.25% roughly in 2008, and that was net of 2 and 20 hedge fund fees.
Decent performance.
Fast forward, he converted to a 40 Act fund in late 2013, 2014. VIT also, so you can trade it in a tax-deferred annuity, as well as a mutual fund. And that's when he brought me in. He was buying almanacs to give to advisors from Wiley. And there was a promotion, you know, buy 500 almanacs, get a free webinar with Jeff. So he did that, but he had his sights on me for a while. We actually met first at the Money Show in San Francisco. I think it was 2014. Late 2014. And we started consulting. And then when we came on board, I brought my director of research, Christopher Mistel, the guy who put all this stuff on, you know, it's like Yale's brain on drugs or something like that, you know, in silicon or whatever, you know. So Chris and I came in, you know, a couple of years ago, and then with the meltdown last fall, we really closed ranks with Joe and came in like really full time and did a whole revamp of the strategy. And it's just, he enabled us and we enabled him to use the new research that we've been doing to compare the different time frames I was mentioning earlier, and the different personalities of each month. You know, the beginning and end of each month is not necessarily the same, but you know, August is a little different, December's a little different. You know, you've got particular points in the calendar that are high conviction days with, you know, frequency and magnitude of gains together or losses. So we go short. Mostly, you know, go to cash during those weak times, or not cash, market neutral.
Market neutral positioning. Got it. We have time for one final question,
Yes.
and I'd love for you to tell us, someone just getting started in the industry, just learning technical analysis, all these other disciplines, what advice would you give them, or what would you tell a younger you trying to figure all of this out?
You got to do your homework. I mean, I think the Almanac's a great place to start, but read the newspapers. Read, I mean, the IBD isn't out there as much as it used to be, but read the Journal.
Sure.
Read Barron's.
Yeah.
It's all available online. Do some reading, and then, you know, follow a stock.
Yeah.
And you just got to look at some charts. Go to a CMT meeting.
Yep. That's
See
right.
what goes on.
Meet
I mean,
others.
it's just, you know, it's not easy.
Yeah. It's a humbling game that
And
we're all
learn
trying
from
to
your
play,
mistakes,
isn't it?
man.
Yeah.
And and write things down. That's probably the most important thing.
Yeah.
That's what we do. Got to spacing and write stuff down. Make
Yeah.
notes.
So it's funny. So and again, thanks so much for doing this. My StockCharts colleagues will tell you I have the Stock Traders Almanac right next to my monitor. I've been doing that for years, and still make notes about things I'm seeing and everything, because I've got all my old ones saved on there. That's the place to do it.
That's it. Love to see him. I take stuff to memory pretty well when I write it down with a pen.
Yeah, right.
You know, it
It
still
works.
works that way.
This was such a pleasure, Jeff. Thanks
Hey,
so
man,
much for giving us
great
some
to hear
time.
you have the Almanac.
Good luck to you. Congrats on the Almanac just
Thanks.
coming out for next year. Good
Appreciate
luck with everything you're doing.
Thanks, man.
Everyone, thanks Jeff Hirsch for joining us today from the Las Vegas Traders Expo.